this video, I'm going to be giving you guys a new tutorial of how to use AlgoSniper. I have just introduced a new update to AlgoSniper, adding an additional indicator to the overall suite. There will be more indicators added to the suite, but in this video, I'm going to be showing you how to trade with the indicator successfully and how to use it. And it's going to help you to make a lot of money if you follow this system and strategy. It will prevent you from missing any big pump, and also it will help you to understand when it is best to sell before every major crash. You will be able to catch some of the biggest moves if you use this indicator. It will not miss a single big trending move. This indicator is something that I personally use to make millions of dollars with trading. And this is my strategy of how I accomplish that. So when you add AlgoSniper to your chart on TradingView, you will obviously need a free account or any account, it doesn't matter. But then you type in AlgoSniper, it should be paired to your username already. You click on it one time. Then you will have the indicator, whether it's on mobile or on your computer. And you're gonna see on the top left under Bitcoin, for instance, whatever chart you're looking at, you're gonna see it underneath it. When it says AlgoSniper, you're going to be able to click the settings button. It is a little gear icon. You click that and it's going to open this tab that has a whole bunch of different things you can click on and off. But on the top, it will say AlgoSniper. So what we are going to do is we're going to go through each and every one of these indicators on the indicator suite, because it is a suite. It is not just one indicator. It is a plethora of indicators all mixed together. All of these indicators mixed together, I believe, in my opinion, are the best indicators you could possibly have. It is the best indicator suite ever made, in my opinion. And I'm not just tooting my own horn. This indicator suite has helped me to make lots of money, millions of dollars, and it's going to help you to do the same. The first part of this indicator is the Sniper Cloud. In the settings, we're going to click on Sniper Cloud. And for some reason, if it doesn't load, just click another pair and it'll eventually reload onto your chart if it doesn't work. So the Sniper Cloud is, you can see this gray little cloud and this white line in the middle. You can change the color of this to green and red if you prefer, but I'm personally going to be using gray. I like the gray, and I'm going to explain to you what this indicator does and why it works and how you should use it in your trading strategy. So this indicator is essentially some type of VWAP or a volume indicator. It moves based off of volume. And the strategy, very simple, is that when the price is above it, it's very likely that the price is going to continue to go higher. And the price is referring to the candlesticks or Bitcoin, cryptos, whatever it is. And that's what I'm talking about. So as you can see, Bitcoin was crashing, dumping it down to this level here. And once it broke above on the 1 hour time frame, we'll get into the time frames later. Once it broke above and held above this white line, look, it pumped very, very strongly. And as you can see, it was crashing down, and every single time it come to the level, it will reject on the white line, came back above, rejected very quickly and kept dumping. But once it broke and held above as support, you can see the price went up. So this white line is going to determine whether the price is going to go up or down. And it's essentially going to show you the trend or momentum of what the price is doing. Whatever it is you're trading, it's going to show you what it's most likely going to do next. As you can see here, Bitcoin at one point had dumped down here, tried to break back above it, but rejected. And look at what happens when you break under this white middle line and you reject it as resistance. You can see the price can crash very violently and very fast. This is going to act as resistance. You see it came up to resistance, rejected. And when it breaks and holds above it as support, you're going to see the market stop selling off and the market is going to go up. So the strategy with this white line, this Sniper Cloud, is when you break above and hold above it, it's very likely that the price can move up. It's very likely that the price can move up. If it starts to break under it, as you can see, the price was moving up. But once it starts to break and close under it, the price can crash. The price can crash. So whatever it is you're trading, it can crash. So just be aware of that. And if you are looking for long positions, you want to be above the white line. You want to be holding above it. If somehow you are in long positions or you are in spot, if you start to break under it, you want to proceed with great caution. You want to proceed with great caution, and the market can crash. As you can see, we have a very strong uptrend. It bounces off of it as support, but once it starts to close under it for the very first time, you can see the market crashes shortly after. So it works with uptrends as it holds it as support, and then it will work once it breaks under, it starts closing under it, it's going to reject as resistance. These can be opportunities to short and to sell. And vice versa, after a crash, when it breaks and holds above it as support, it's an indication that there's some strong momentum. Now, in a choppy range-bound environment where the price is just moving like this, you're going to see it break and hold above constantly, and there's not going to be any consistent move. Sometimes there are. You want to be aware of that. These indicators, they work great in trending environments with strong moves up and strong moves down. In choppy environments, you're going to get a lot of mixed signals, and that's just with any indicator. So the best way to trade with this indicator suite is you want to look for a very big pump up. Once that big pump up starts to roll over, you want to follow what I'm telling you here with the strategy. Once you break and close under it, you want to look for short positions and you want to be selling. After a big move up, there's always going to be some type of most likely strong trending move down. It's not going to be choppy most of the time. And after a big move down where there's a very big crash, you want to wait for the indicator to flip positive or bullish, break above the midline, hold above the midline, and you're going to see that there is going to be a pump. You see there's a big crash here. After a very big move, whether it's a big pump or a dump, the market's not really going to chop. The initial first move is going to be a very big move to the upside, and there's going to be a very big move to the downside. As you can see, a very big crash came after a very big pump. The market works like physics. After a big reaction, there's going to be an equal or opposite reaction. So just pay attention to that. So this is essentially how the cloud works. I really love the 1 hour time frame on this. If you want to be more aggressive, the 30-minute time frame is going to work really good as well. But you also want to pair it with the 4 hour time frame, and also the daily time frame. You can see the 4 hour time frame is a lot less choppy. Once Bitcoin broke and closed under the 4 hour time frame on this indicator, you can see that it rejected as resistance. This would be great shorting opportunities here, great opportunities to sell. Like if you're holding a spot position, you bought some type of stock or crypto, and it starts to break and close under here, that's a good time to sell on the 4 hour time frame. And the 1 hour time frame is going to be obviously more aggressive. And then you can see on the daily time frame, we see for Bitcoin, once it starts closing under this on the daily time frame, you can get a really big downtrend, a very big crash. So use the 1 hour, 4 hour, and the daily time frame all in confluence. But the bigger the time frame, the stronger the signal is going to be. For instance, if Bitcoin is closing under the daily time frame and under the 4 hour time frame on this indicator, but the 4 hour is bullish, or the 1 hour is bullish, the 1 hour is probably going to be bullish in the short term, some type of short move that you can catch that you want to quickly get in and out of. When everything is lining up, when the 4 hour is lining up, the 1 hour, the daily, everything is bullish, then it's very likely that a strong uptrend is happening and going to continue to happen, and vice versa, the equal and opposite on a downtrend. When everything is bearish, daily, weekly, 1 hour, 4 hour is bearish, you want to be looking for short positions only. You want to be looking to sell. You don't want to be looking to fade that move. And if you do, it's a quick in and out of position. The second part of the indicators, you have the EMA-based candle colors. These essentially are based on the 20 EMA. The candlesticks relevant to the time frame and the 1 hour time frame will be green or red. So you essentially want to be looking for long positions when the candles are green, and you want to be looking for short positions when the candles are red. Symbol, you can adjust the EMA length to your favor as well. You have the bullish and bearish dots that are also based off the 20 EMA. So when you have green dots, you can adjust how many dots you want. This is a good time to only take long positions. When the dots start flipping red, that's when you want to be looking for short positions as well, or selling. Now you have the trend reversal diamonds. These diamonds will pop up when there typically is a strong confirmation of bearish or bullish trend. You can get a lot of mixed signals, but as you can see, a huge crash took place once this red diamond popped up. And again, red diamond popped up, a big crash. You can see this green diamond popped up before a very big pump right after the green diamond. So these can show you confirmation of a possible strong move. It's just a bullish or bearish signal to pay attention to. This is my new indicator that I've added. This is an incredible indicator. It's going to be yellow, so you can see it with all the indicators together. When the price breaks and closes above this indicator, especially in the 1 hour time frame, which we're using now, you can see you're going to want to look for long positions. Do not look for long positions or look to buy unless the 1 hour at the very minimum is breaking and holding above, and including the 4 hour as well. You want to definitely use the 1 hour and 4 hour as a strong sign of confluence. As you can see here for this particular coin, Bitcoin, we broke and held above it. You get a huge pump. As soon as it closes under this indicator, you want to sell or cut your positions. As you can see, it starts to crash and reject it as resistance. It's going to act as support and resistance. You can see during the strong crash, it would not break and close above it. During a strong crash for whatever asset you are trading, wait for the 1 hour to break and close above this indicator before you start to long or buy, because otherwise you will be knife catching. This indicator will prevent you from knife catching, and you can see that after a huge pump, once it starts to break and close under it, you have a massive crash and it continues to act as resistance. You see, it comes up into it and rejects, and then look, a huge crash down. Comes up, failure to break above, and it starts to crash down. This indicator is going to keep you in very good trends. You can also adjust the sensitivity. This is on high sensitivity. The medium sensitivity could also work really well to keep you in these trends as long as possible. As you can see, during this entire sell-off for Bitcoin recently, it would act as resistance. It would break and hold above just for a short period of time and then quickly reject. These could be opportunities to add to your short positions, to sell, to take profits, or to exit positions, period. Once it breaks and closes above, as support, you can see a huge move up. And as soon as it breaks under and starts to reject under, you can see that it starts to go lower. The next indicator on this suite is called Algo momentum. You're gonna see these red arrows and green arrows. These indicators show you that when bullish momentum is starting to kick up, and it will show you when bearish momentum is starting to show itself through a bunch of indicators that I've programmed this to. So it's nothing to buy and sell off of. It just shows you bearish momentum, shows you bullish momentum as well. You also have these diamonds. These can work as take profit indicators. But whenever you see these could typically be local tops or local bottoms. As you can see, you hit this and the market kind of went down immediately after. This is essentially RSI rejections on the bullish and bearish side. And you can see every single time these diamonds pop up, most of the time there's some type of bottom or some type of bounce soon after. It works on every time frame, and you're gonna see these at the tops and bottoms. It doesn't mean to buy, it just shows you possible bullish momentum, possible bearish momentum, areas to consider taking profits. It's essentially a form of a rejection in the RSI. You can see here, sometimes it just nails these tops and bottoms almost exactly to the T. You have the buy and sell indicator. This is not something that you want to buy and sell immediately after, but it's just another additional bullish or bearish signal when you see it. This works really great before strong trending moves. And yes, you can get a mixture of signals sometimes, but all the other indicators, you want to use them together as confluence. You don't just want to be buying and selling based off of these indicators. As you can see, you get a sell signal, the market crashes, you get a buy, and you catch a nice trending move. You get a buy, it goes up, sell, and it goes down. Vice versa, you get a sell before this big move down. The next indicator is going to be these sniper bands. This is very important. You're going to want to use this with all the other indicators that we've talked about. I'm going to show you my personal settings of what I like, but I love the 1 hour time frame. And during a big crash on cryptos, I do not want to take long positions until we've broken above the bands and they flipped green, and we're using it as support. When the price is using the green bands as support, you can see that we are in a strong, nice uptrend. But when these bands flip negative, when they flip red, you could see the market starts to crash and crash quite violently. So when the bands are red, you want to be looking for short positions. When the bands are green, you want to be looking for long positions. Do not long or short before those times. Otherwise, you could get yourself caught in a knife catching situation or end up trading against a very strong trend. When these bands are green, it's very likely that there is a strong bullish momentum. The 1 hour, the 4 hour works great. The daily works great. But once the momentum flips bearish, you don't want to be looking for longs until the price breaks and holds above as support and the bands are green. And vice versa, you don't want to be shorting when it's green. You want to wait for it to start closing under. It's very important. Look at how the price, it starts to close under here. You see how it's closing? It starts to close under. Once it starts to close under, then the market can crash and drop very quickly. And you can use this as resistance. It's going to keep you in the trend. But look, once the band starts flipping green, then you can see that the price starts to actually push up. These are based off the 10 and 20 EMA, but you can also add the signal to see when the bands are flipping green or red. You also have the top and bottom indicator. This is a multi-divergence finder. It's going to find how many divergences, bullish divergences, bearish divergences, are on each and every area of the market. As you can see, there were 6 bearish divergences here at this top and a huge crash followed. This works on a bunch of different time frames, but look at this. You have 7 bearish divergences, and look, a huge crash soon followed, and look, 5 bullish divergences here, 4 bullish divergences here. When you see these bullish divergences, it's a strong possibility that there's soon going to be a reversal of some sort or some type of bounce, whether on the top or bottom side. So it's a very interesting indicator. It's not something you want to go ahead and make a trade off of, but it's just something to be aware of. Hey, there's some bearish confluence here. You also have the institutional demand zones, support zones. You can see when you click it, you are going to have support and resistance. This is where it's going to show you there's a lot of resistance in this area, and you're going to see a lot of support in this zone as well. So just pay attention to these zones. These could be areas to take profits or to sell. And if these zones are flipped as support, then you could expect another move higher. So it just shows you visually on the charts, support and resistance, where there's a lot of buyers and sellers. You also have the mean reversion channel. This shows you when the market hits these extreme areas where there could potentially be a reversal. As you can see, it gets very close to this red band and the market reverses. The market pushes really close into this mean reversion area here. The market bounces every single time. And you can see it broke out of this area, and that was actually a bottom. So whenever the market gets into these extreme areas, you want to pay attention, because any type of extreme move will likely reverse very quickly. You start to push really, really extreme here, expect some type of pullback or mean reversion soon. The mean reversion is the middle. It's going to revert back to the mean. That's how the market works. It's constantly moving back and forth, back and forth. And when the market makes a very aggressive move, there's going to be some type of mean reversion. It's going to pull back a little bit. This is what this indicator is letting you know, that it's getting to an extremely overbought area, extremely oversold area. That's essentially how this works. You also have this 200 EMA, the trend EMA. This 200 EMA is a very important indicator. It lets you essentially know whether you're in an uptrend or a downtrend. On the 1 hour time frame, if we are above the 200 EMA, it's very likely that there is going to be some strong bullish momentum. If you are under the 200 EMA, even though a lot of indicators are bullish, it's still a downtrend. We are essentially in a downtrend, and every single bounce is most likely going to sell off. So for the market to be bullish, you want to be above this 200 EMA, which is this green line. It flips also red when you're under it. You want to have to be breaking over the sniper cloud and all the other indicators that we've talked about for it to be very bullish. If there's a mixture where you have a bullish sniper cloud, you have a bullish, but the 200 EMA is bearish, that shows you that you're in a downtrend, but there's a small bullish move in the downtrend. You want the 200 EMA, here's the price. You want the 200 EMA to be under the price holding and breaking above it. You want the cloud, you want to be above the cloud, you want to be above the EMAs, you want to be above all the indicators. When that lines up, you're in a strong bullish trend. When that does not line up, there's a mixture of bullishness and bearishness, and the market can be very choppy. You want to be very, very careful with that. And that's why we have one final indicator here called the multi-timeframe EMA table. You can see here the time frame 1 hour, 4 hour, daily, and weekly. These are the most important time frames. And these are the 20, 50, and the 200 EMA. As you can see right now, the only bullish thing on this EMA table is the 1 hour time frame. Everything is bearish. So that essentially means you're in some type of bear market, a downtrend. And that means every single pump or move up is most likely going to be sold off. So you really want to pay attention to that. When all of these line up green, the market is very bullish. When all of these line up red, the market is very bearish. When the market is very bearish, you want to be shorting. You want to be selling off every single pump. You want to be selling. You essentially only want to be doing that. But when it starts to slowly flip green, you want to be looking for a mixture of different trades. So this will keep you in check whether the market is bullish or bearish. You just want to pay attention to that. Now, the other indicator we have is AlgoSniper momentum. At first, you're going to see these red lines and the green lines and this type of MACD. This works great in all different time frames, but as you can see, when this line hits this green area, this is essentially a really good buying opportunity. And when these lines cross, that means there's going to be some bullish momentum, which there was there. When this begins to cross to the other side, bearish, then you're going to see there's a downwards move. So this shows you the overall momentum of what's taking place. And if you see here, Bitcoin in this instance here pumped up to this overbought area. This is an area essentially you want to be considered selling or paying attention to. And look, it crossed bearish and the market ended up pulling back. The market came to this oversold area here. It crossed bullish and look, there was a move up. So it kind of keeps you in check to see momentum. But ideally, you want to be buying when the momentum is down these levels here, and you want to be selling when this crosses into the extreme red zone. You can see here there's a recent pump to Bitcoin around this region here. Once the market started pumping into here, this extreme area, you could see that the market, once it tapped this extreme area, started crossing bearish, that the market started to roll over. And you can see that there is a bearish divergence. You see here, there is a higher high, but on the indicator, a lower high. You see, higher high here on the indicator, but lower high here. So the price is moving up, the indicator is moving lower. That is a bearish divergence. You want to pay attention to these bearish divergences. They're going to show you a lot what is about to take place. There's also a bullish divergence here. You see the low went lower here, price moving like this, but the indicator moving higher here. When you see this, look, there's a huge bounce shortly after. Once you go into the settings, there's a lot of different things you could change, but the other one is going to be the momentum indicator. This indicator is really, really cool. Essentially, what you want to look for is whenever you have a huge momentum move down, this shows you the strength of the move, very strong. But when it begins to flip colors, you see how it's really bright red here, and it begins to flip colors, dark red, that means that momentum is shifting. You also have this diamond here and this triangle. These are bullish signals that you are witnessing. So it's like bullish momentum signals. So look, if you'd have just traded off this indicator, you see that it's kind of flipping here, kind of a bottom signal. You will see this typically at bottoms. You see momentum is shifting. Look, you have a huge move up. After the big move up, look, momentum starts to shift right here and the move started to dump shortly after. And look at this. Bitcoin had a move up, but look at momentum was moving lower. Momentum was moving lower while price was going higher. So there's a bearish divergence there. And you can see shortly after there was a big crash. Vice versa here on the bottom side, you can see momentum. See how it's slowly beginning to curl up while the price is violently dumping. That shows you that's probably going to be a very big move up soon. So pay attention to these bearish and bullish signals. This is going to show you momentum when it's about to roll over. You can use both of these momentum indicators together as a sign of confluence. Now, the way I work this indicator, the way I have my settings set up here, is I have this sniper cloud clicked on. I use the super trend, the sniper bands, the trend EMA, and sometimes I'll keep this EMA table on. I'm going to click it off for this. But look, I was looking for long positions in this region here. Once Bitcoin broke and held above the sniper cloud, which is the white line, okay, that's the first bullish signal. It breaks above the yellow line, which is the super trend, and also at the same exact time, it's broke and closed above the sniper bands. Once it did that, look, you have a huge move up to the upside. Now, once Bitcoin started to close under this level, the 200 EMA, you also started to close under the sniper cloud. Look, the market dumped pretty violently shortly after. So you want to be really, really careful. If you are in long positions and you start to break and close under the bands here, the green one, that's a first sign that you want to probably soon exit. And then look, a crash shortly after. Look, you have this very violent crash. If you'd have long, you've got wrecked here. But if you'd have just waited for the 1 hour to break and start holding above the bands, look, it breaks and holds above the sniper cloud. Then you have the super trend. You can catch a nice move here. And look, even though the market started pulling back and we started dumping a little bit, it broke and held above the super trend. It broke and held above the sniper cloud. And look, you get a nice move up here. As well, you have another crash here. Bitcoin started to break and close above all of the indicators, the 200 EMA, the sniper cloud, the super trend, the bands. And look, you have a nice, strong, massive move. When everything flips bullish, you can get a very big move. And look at this. You have a very strong bullish move here. You catch this nice move with the indicators, but you start to close under the sniper cloud. You start to close under all of the indicators here. That's a good time to exit and to sell. Another thing that you want to look for when it comes to selling is you want to look for market structure. You start to form lower highs. That's an exit there. Another lower high here. That's another warning sign. If the market is bullish, you're going to see the market continue to push new higher highs. When the market is reversing from a bullish trend, you're going to see lower highs and they're going to have like this V-shaped type of move here, and that's going to reject. When you see that, you exit immediately, and all the indicators are going to line up with that. When the market is crashing, when you are looking for long positions or buying, you want to start to see higher lows. You want to see the indicators flip bullish, the market holding above those indicators as support. That's when it's bullish. You catch a nice move, you start to see that lower high. Some of the things that we're talking about, you want to go ahead and just take profits aggressively. In very strong environments, if sometimes you are going to see the market holding up very strong, continue to push higher, it's going to act a little choppy. It's going to break under the indicators. But if it looks very strong, you can continue to hold on to your position. But if it starts to break and close above, it's a massive warning sign. You're going to want to start taking some money off the table. But if you get into the situation where the indicators flip bearish, but the market continues to push up higher and actually starts to push up higher, once the indicators start flipping bullish again and all the criteria is met, you could just re-long. And then once the bearish criteria is met, you can start exiting again. So this is essentially how I use the indicator. You can also right-click on your chart and you can add an alert. You're going to see AlgoSniper, and you can add an alert for buy or sell signal. You could add for when the bands are flipping green or red. You could add when the sniper cloud is going up or down. You can also add an alert for when Algo super trend, the price is crossing above it or below it. You can do this on the 1 hour time frame. I think that's a really, really good alarm. Set the alarm there so that you can always be aware when the market is about to crash. That's pretty much all I have for you guys today. I hope you guys are enjoying the indicator. Let me know other things that you want to add to the indicator, how we can make it better. But this indicator, if you learn it, follow it, back test it, look at some previous charts, look at some other things, learn this system, and it's going to help you. Yes, you're not going to catch every single move. That's okay. But what it's going to do is when there is a huge move, you are going to see the indicator flip bearish or bullish before it happens. It always will. Every single time the indicators will flip bearish before every major crash, before every major pump. They will always flip bullish and bearish, and you will see them. If you ignore the indicator, you can get caught in huge crashes like I've done so many times, and you can miss out on some really big moves. If you use the indicator and keep it as a part of your rules and strategy for your trading, you're going to make a lot more money, and you're going to take a lot less losses and experience a lot less drawdown. That's it. I appreciate it. I appreciate you guys using the indicator. If you guys got anything out of it, please consider giving this video a thumbs up, leaving a good review, and I will see you all later.